All right, let's jump right in. We're talking about one island, but two completely different worlds when it comes to your money. This is the tale of two tax codes, Ireland versus Northern Ireland.
And this is the big question, right? It's kind of wild when you think about it. You can hop in a car, drive just a couple of hours from Dublin to Belfast, but in that short trip, you've crossed into a totally different financial universe. So how can one island have two tax systems that are so different? Well, we're about to break it down.
Yeah, this really isn't just a boring numbers game. It's actually a story of two totally different economic strategies, two different bets on how to build a country happening right next to each other. So let's get into it.
Okay, so where do we start? Well, let's begin with the thing that hits closest to home for all of us, your paycheck. We're going to look at just how much of your hard-earned money actually stays in your pocket, depending on which side of the border you're on.
So you look at the headline rates and you'd be forgiven for thinking, hey, these look pretty much the same, right? Both have a 20% rate, both have a 40% rate. Seems simple enough? But, and this is a big but, those numbers are just the tip of the iceberg. They really don't tell you the whole story. And here's the catch. Down in the Republic, that main income tax number is just the start. You've got to pile on a couple of other things, the Universal Social Charge, or USC, and then another one called Pay-Related Social Insurance, PRSI. And when you add all of those up, suddenly that 40% top rate can balloon to something like 48 or even 52%. The actual bite out of your paycheck is way bigger than it looks at first.
Now, to be fair, Northern Ireland has its own version of this, right? It's called National Insurance, or NICs, and it's part of the whole UK system for things like the NHS. But here's the key takeaway. Even with NICs, the total hit to your paycheck in the North is, well, it's just not as painful.
And don't just take my word for it. A major study from the Economic and Social Research Institute, the ESRI, dug into this, and what they found is just wow. They found that on average, workers in the Republic pay roughly twice as much income tax as people in Northern Ireland. Let that sink in. Twice as much. That is a huge, huge difference.
Okay, so that's the story for individual workers. But now let's switch gears and talk about the big players, the corporations. Because when it comes to business tax, this is where the two paths don't just diverge, they go in completely opposite directions.
There's one number that has defined the modern Irish economy. You've probably heard it, 12.5%. That single figure is the secret sauce, the engine behind the Celtic Tiger, and it's been an irresistible magnet for the world's biggest companies.
And just to be clear, this isn't some kind of tricky loophole. It's the official rate on trading profits. It is the absolute cornerstone of Ireland's entire economic strategy, and it was designed with one goal in mind: to get the biggest names in tech, pharma, and finance to set up shop right there.
And look at this comparison. It just lays it all out, doesn't it? The Republic of Ireland at 12.5% and Northern Ireland, as part of the UK, at 25%. It's literally double. Now imagine you're a giant global company deciding where to build your European HQ. That difference isn't just big, it's a total game changer.
So, what's the result of all this? Well, it's pretty obvious. The Republic has become this powerhouse for what's called foreign direct investment, basically big global companies pouring money into the country. Meanwhile, Northern Ireland is stuck with that higher UK rate. But here's a really interesting twist. Northern Ireland actually has the power to set its own lower rate. The UK government gave them that power. The problem? For a bunch of reasons, political issues and the huge question of how you'd pay for it, they've just never pulled the trigger.
All right, so we've talked about your earnings and corporate profits. But what about the money you spend every single day? Let's look at the taxes that show up on your receipts, the ones that change the price of everything from your morning coffee to a new TV.
And yep, the differences keep on coming. Take VAT, the sales tax on most things you buy. It's 23% in the Republic. In the North, it's 20%. Now, 3% might not sound like a lot, but it adds up on everything you buy. And it's not just shopping. If you're talking about taxes on things like investments, well, those are generally a lot higher in the Republic too. And there's more. On top of that VAT, you've got something called excise duties. These are extra taxes slapped onto specific things. Think fuel for your car, a pint at the pub, or a pack of cigarettes. And you guessed it, those tend to be higher in the Republic as well. It all contributes to a higher cost of living for a lot of day-to-day stuff.
Okay, we've covered a lot of ground, from paychecks to corporate HQs to the price of a pint. So what's the final scorecard look like? Let's pull it all together and see the two big picture models side by side.
So here's the deal with the Republic of Ireland's model. On the one hand, you've got this incredible success story, a global hub for business, all thanks to that magic 12.5% corporate tax rate. That's the pro. The con? Well, the price for that success is a heavier tax burden on workers and higher prices in the shops for pretty much everyone.
Then you flip over to the Northern Ireland model. For the average person, the deal looks a little different. Your paycheck is lighter on taxes, and things you buy are a bit cheaper because of the lower VAT. That's the good news. The downside? That much higher corporate tax rate means it's just not in the same league when it comes to attracting those huge global companies.
So, when you boil it all down, it's a fundamental choice, isn't it? Do you build an economy that prioritizes lower taxes for individuals, or do you build one that's a paradise for corporations? We're watching two different experiments, two different answers to that question happening right next door to each other on one small island. And that leaves us with the big final question. Which path actually leads to a better future in the long run? And as you can probably tell, there's no easy answer to that one.